Hi guys, it's Trader Tinashe and today I am going to analyze Crash 500 with you guys. So let's start now. The first thing we do, like always, we look for the trend, we look at the market structure so that you can tell if we are in an uptrend or a downtrend. So right now I can see that I've got a high here, I've got a low here, and I've got a lower high here. So I'm expecting a lower low here. So this is a downtrend, as you can see. So if I'm expecting a lower low there, what am I supposed to do next? Okay, so I am supposed to touch my two highs and my low to create a channel. Okay, we use the parallel channel right here. If we touch here, then we touch the second low, we let the line go, then we touch the bottom part, which is the low. There, we now know where the market is heading, right? So like this, we have a clear view of what the market is going to do next. So this is very simple. I will explain it a bit further. Okay, the first thing we do is look for the trend. The market is either in a downtrend where it's creating lower lows as it goes down and lower highs, or the market is in an uptrend where it's creating higher highs and higher lows as it goes up. So in this case, the market is creating lower lows as it's going down. As you can see, we're expecting the market to touch here, maybe go back and touch here again, and goes on. So just like that, we now know that the market is bound to touch the bottom, but we don't have the perfect entry. We don't know when to enter. We just know that the market will go down. So we change time frame and move to a smaller time frame. Right now I'm on the 4-hour time frame. I am going to move to the 1-hour time frame to get a clear view of what's happening inside the market, inside the smaller time frames. Okay. So this is the 1-hour time frame. The 1-hour time frame is giving us a good trend. You can see that the market is going down, created a low here, came right here, created another high. Now it's going down, so it's supposed to create a low, create a high again, go down, just like that. So now we know what the market will do. The next thing we'll do is place our parallel lines again. We touch the first high, we touch the second high, and in this case the highs are matching, the second highs are matching to make another high. So like this, what I'm expecting now is for the market to do this movement, touch here, go up, touch here, then maybe go up and continue going down. But this is what I'm expecting. Oh, if the market happens to reach here, if it breaks this channel, it then breaks it and then continues going down. We won't have to wait for it to respect the channel any longer. So like that, we now know what the market might do on the 1-hour time frame. Okay, so now we are looking for the perfect entries. So we zoom into the market, we zoom in. Okay, now we take our rectangle. Our rectangle will mark all strong support zones. As you can see, this was a very strong support zone. It will be marked here. It has already been respected and retested. Okay, the next zone would be looks very clean. We have less resistance here, meaning our next zone would be somewhere here. Then our next one would be here. So this looks very clean, guys, but you can even remove this because it looks way too clean. You can only work with that. Okay, like that, we now know that this zone right here was broken, but it hasn't been retested. This zone was just broken. So we take our horizontal ray, we place it at the bottom of the spot. As you can see, when a trend line is respected, we move the trend line to the bottom of the candle that respected it. As you can see, in this case, it will become here. This will be our next low. So you can see that this low has been retested. So if this low was retested, it was broken, this was the breakout candle. Let me indicate it for you. This was the breakout candle, right? And this was our retest. This right here was our retest candle, which then proved that the market has broken out and retest, so the market is now going down. This is a clear sell. So you can just take the trade on your own, take the sell, and try to see if you make profit from this. So what I would do if I was you, if I want to really learn how to master this market, I would open the chart again on a 4-hour time frame, do my analysis again on my own, find out what I did and what the market would do, just like I did, do my analysis on my own, on my tablet or on my phone or on my laptop. Then after that, I would enter even on demo and then wait for the market to make profits. Take your TP and then mark your in your notebook, mark it as a stage you've completed. You can now analyze on your own Crash 500 and then do it again on a different instrument. So like that, guys, you won't ever miss a trade. You also get better at learning to analyze the market. You also get better on understanding all the market movements and what the market is what the market will do most of the times. Okay, so let me go ahead and place my trade here for the short position. So if the short position is entered now, my stop loss would be right above the previous high, which happens to be here. So it will be somewhere here, right above it. Okay, then my TP, my first TP would be this point right here, where it respects this liquidity right here. And then we have a 1:1, which is not bad, but if you move your stop loss a bit, because the market is already retested, you can use the high of the high of the retest, which happens to be somewhere here. And if you work with that, you have a 1:2 risk to reward ratio. But if you want to risk hard, you can just enter sell, then take your money. But the original take profit would be right here. Okay, so that's your original trade, that's your original take profit. But this is the 50% line. So what usually happens when the market reaches the 50% line? The market usually breaks the line, finds a support zone, comes back, retests the line, dances a bit, then continue going down. So you have to ask yourself if you are able to hold for as many days as long as the market keeps going down to reach your TP. Okay, so that's the first question you answer yourself. And then to make things more clear, you can take your parallel channel again, you can touch these two highs, touch this low. You can see that currently the market is at a support zone. So for other people who don't like just entering the trades, you can wait for it to break this support zone, which will happen eventually, because at this zone other people will be looking for buy entries. You can see that at this zone we're expecting the market to respect this, go up, touch this point, and go down. But I'm telling you from my analysis that this will be a buy. So what I'm expecting you to do is wait for the market to break this channel and then sell it, retest this channel, retest the 50% as well, then go down. So that's how the market will move on this Crash 500 index. So I think that's all for Crash 500. We'll just have to wait and see how it will play out if this line is respected. But if you want to find a perfect breakout that will suit you well, you take your trend line, you use this as your first low. Okay, let me remove it first. Use this as your first low, then this as your second low, you let the market go. You can see that the market has broken and also retested. So this is a confirmation of a sell. You have this confirmation of a sell, you have this confirmation of a sell. This is another confirmation for a sell. This breakout was a confirmation for a sell. This breakout again was a confirmation for a sell. Then this channel is a bigger confirmation of a sell. Then the 4-hour channel is a way bigger confirmation of a sell. So compared to the one confirmation for a buy you have for the parallel line here, we have 4 confirmations for a sell for on the 1 hour time frame. So you just have to weigh the options, see which side has more profit, which side has more confirmations, and then you stick to your plan, you stick to your strategy. You take your trade, hold it, and exit and take profit. So that was the analysis for Crash 500, right? So let me do another analysis for you guys. Okay, we can do Crash 1000. Okay, let me start over. Move to the 4 hour time frame like always. Now you have to listen carefully on how you analyze this market. Okay, so when analyzing Crash 1000, you have to first find the trend. You can see that this was an uptrend as the market was going up, and then this uptrend was broken, right? It was broken and retested, meaning the market is no longer in this uptrend. So this is no longer valid until this point where the breakout came. So this high is the only high we are working with. So with that, delete everything and start working with the first high from the breakout. Okay, the first high before the breakout, that's what you want to work with. Okay, now like that, you are now working with the first high before the breakout. What are you looking for? You are looking for the trend again. The market is now creating lows as it goes down. This is a low. This we're not counting it because it's before this line. We only want what's after this line, after the market broke out. The first high before the market broke out and goes on. So we have a high here, and we have a low, and we have another high, and we have a low as well. Okay, so we can count this as a low, but it's not yet a valid low because it didn't break the previous low. So it's supposed to break the previous low, then continue going down. So to confirm it as a low, we have to wait for the market. We have to wait for the market to continue going down. Okay, just this, go down, then create a low, then continue going up, then create another low. So something like that is what we're looking for. So working with what I just explained, in this case, in this scenario, we have this high, and in this low, we've got the second high, and the market is still moving, it's zigzagging. It will create another low, go up, something like that. That's what we're expecting, right? So take our parallel channel, we'll place our first touch at the top. Okay, let me move to the 1 hour time frame so that you see it a bit more clearly. Okay, now on the 1 hour time frame, you can tell that this is not a low. On the 4 hour time frame, it looked like a low, but on the 1 hour time frame, you can confirm that it's not a low. So you know that that's not a low. So what are you going to do now? You are going to work with what's there, guys. You're going to work with what's there. Okay, so if you're going to work with what's there, you're going to take your parallel channel, you're going to touch the highest point, which happens to be here. You let the market go. So you can see automatically, if you just let the market go aiming for the second high, the market will automatically respect this high as well to create what you call an M pattern, which was created here. This, okay, then you place it between the first and the second highs, which happens to be here. Okay, so this, you're supposed to let it go, you're supposed to let it flow all the way there. Okay, then you move back. I want to explain what I was saying. This is a chart pattern. This is an M formation. It was created and respected, and the market did what it did and continued going down. The market created our second high. Now the market is going down again, dancing around. So what I'm expecting the market to do is I'm expecting the market to break this 50% zone, retest it, then go down again. But you know how the market works. It might not come out the way we want it to come out. So we just have to analyze both ways, analyze for a buy and analyze for a sell. You weigh the options to see if the buys are stronger than the sells or if the sells are stronger than the buys. Okay, so right now we have our channel on the 1 hour time frame that's indicating a sell, that the market is supposed to go down and touch our 5,158 zone right here. But on a different time zone, if we move on to the 30-minute time frame, we can see that the market is looking like it's creating a flag to go up. Okay, so what you do again is you take your pyro lines, you touch your first high, let the market go. You can see it will be something like this. You touch the first point, which happens to be okay. So if you are going to touch this low and let the market go, it wouldn't come out nice, because when it came here, the market broke out and then retested. And like I explained earlier on Crash 500, if the market does a fake out, you move this, this becomes our first low. The next support becomes our first low, and we no longer consider this as our low. Okay, it's not strong enough to be called a low. Okay, just like that. Then this will be our first high. This will be, so this, both of this will be counted as one high, point A. Okay, so in this case, the market will look something like this. So this will be counted as one high. Okay, working with that, you can now see that the market is at a very strong support zone. Is at the 50% line, and it's also at the channel. It's also respecting the channel. So in this case, what I would do is I would wait for the market okay, I would place my buy here, wait for the market to touch this point, and then put my stop loss here and aim for a TP right above here. Okay, my TP would be touching this point right here, but flags have there's certain geometry that should be followed. So if you see a flag, know that there is a certain distance that it should cover. So in this case, this distance from A to B here should be the same distance the market covers from A to B. So in this case, this is another confirmation for a buy. We're working with confirmations, guys. In trading, it's all about confirmations. You do your analysis looking for both sells and buys, but the more the confirmations and the stronger the confirmations at one side is the trade you take. So if there are two parties, a buying party and a selling party, if there are more votes to the buying party wins, and if there are more votes to the selling party, the sell party wins. So in this case, you want to see which party is the most confirmations. The confirmations are our votes to buy. So we're going to count all the confirmations after we're done with this. Okay, so we take our forecast again, put our long position. Our entry would be here. These are perfect entries for the buy flag. Continue going up, and our TP would be here. So these are our two trades for the buy. And when you see a flag, if the pole of the flag is strong and accumulative, like in this case, okay, if this pole of the flag is accumulative, if it's moving fast, that really confirms a flag pattern. So if this moves fast and then dances around creating our flag and then moves fast again up, it will also move fast again up. So if this movement was fast, then it means this movement will also be a fast movement. So this would be a very fast buy. So you can see that the TP would be here, also confirming our 30-minute or 1 hour channel you can see that our 1 hour channel will be respected. Okay, so in this case now we know that the market is supposed to go down, but now it's creating funny movements, right? We know that the market is supposed to touch this low, but we don't have the perfect trade, and it also created a flag. It created a flag that it is respecting. So we're going to wait for the market to reach this point. So what do we do when the market reaches this point? For this point, if the market reaches this point, it means that our flag pattern has been respected and our 50% line has been respected. So we can now cancel this trade and cancel all the possibilities of a buy after it reaches this point. It means that our buy votes are now less. So meaning right now we don't have a sell vote. The only sell vote we have is a long-term sell vote. But then our our 30-minute time frame contradicts this sells, because we've got a decent buy of a flag pattern. So what I would consider doing is buying here and then taking our first take profit here. But you know that the market will break this point to create our flag and continue our flag. It will touch this point. So the next thing you do is take your rectangle. You take your rectangle, you look for the support at this point. So you have this strong support, you place it here. Okay, it's going up a bit, something like this. That's our support, so that's our strong resistance zone. So if we are going to work with this resistance, it means that we are going to allow the market to reach this point. Okay, so when it reaches this point, we've got a bigger opportunity to sell than to buy, because this will be a confirmation of a sell, because it will still have respected our channel. It will also become an M formation. You can see that this M is there. So now we're going to wait for the market to reach this point. But also when the market reaches this point, there is a chance that the market will break out. So to see the breakouts, you move to the 1 hour time frame again. Okay, to see the breakouts, you move to the 1 hour time frame. Let me move to the 2 hour time frame to get it a bit more clear. Okay, the market will come, retest this zone, and then what you want to confirm a buy is a breakout at this zone right here. If the market breaks out here, it will break out, retest, and then we expect the market to go down. But if the market comes and then creates a reversal like the M or the heads and shoulder pattern or any kind of reversal patterns, you're now expecting the market to go down. So what you do here is to confirm our trade. What we do here is we put another channel. Okay, in this case we will put another channel, right? Let's move to the 1 hour time frame. Okay, so this channel, we are going to work with a high that's not been created yet. We just know that the high is going to come, but we are not going to work with it yet. So this would be our first high, this would be our second high, and the market will go. So then this would be our first low, and automatically you can see that this has been respected for the 4th time. So we've got this channel has respected it. We have the flag has been respected. We have the 50% line, which has also been respected. So just like that, we now know that this is a confirmation of a good trade. So either way, the market has to go. The market has to go from here, continue going up, touch this point. Then from there, you wait for it to respect this zone. If this zone is respected, now put on huge cells that will go down and touch the bottom line. But if it's not respected, the market will break and continue going up. So for the moment, we have a very good trade, which happens to be a buy. Okay, the buy we want is now. We can buy now, and then we can exit when the market reaches this point. The first TP would be the inner greener zone, and the second TP would be there. Then if you are to place a sell, our sell limits, if we are going to place a sell, our sell limit would be here. Sorry, that's a buy. Our sell limit would be here. Our stop loss right above this, or right above the previous low, which this is the previous low. Then our take profits would be here. So guys, this is just perfect. This is professional analysis. If you are able to analyze the market this way, then know that everything has just got more clear. Okay, so just like that, you have a good analysis for Crash 1000. Everything's perfect. So with that said, if you are new, please make sure to subscribe, and if this helped you, like, share, and thank you for watching. So goodbye. See you at Take Profit.